and welcome to LedgerCast. My name is Brian Krogsgaard, and today we have Nik Patel on the show. Nik has written a book all about trading altcoins, and he goes through his own journey of what it's been like growing up in this ecosystem, learning to trade in this ecosystem. If you haven't read his book, it's a really great book. You do not have to have read his book in order to do this interview. We just go over some of his story and recap some of the things that I learned. That doesn't make it less interesting to read his book or, any of that. This is no spoilers per se, but we highlight some of the stuff that I loved. If you enjoyed this episode, please rate us on iTunes or subscribe on YouTube, all that fun stuff. This episode is actually brought to you by The Ocean. If you go to ledgerstatus.com/The Ocean, you can learn more about them. And they've actually extended their deadline from July 31st to August 15th. And you have time to get the Ocean airdrop for tokens that enables trading discounts on their platform. The Ocean is a 0x relayer, meaning that this is a DEX and they don't take custody of your funds. This is a lesson that Nik learned the hard way about a lot of the troubles with exchanges back in the day. The Ocean is looking to solve those problems. I'm excited to have them as a LedgerStatus partner. Go to ledgerstatus.com/The Ocean to learn more and pre-register for that free airdrop. Let's get to the show. Hello and welcome to LedgerCast. My name is Brian Krogsgaard, and today we have Nik Patel on the show. Nik has written a book about crypto and his journey in crypto. Nik, welcome.
Thank you, man. Thanks for having me.
So tell us the bare bones of what is this book, and then we'll dig into your story.
Sure. So the book is called An Altcoin Trader's Handbook, and it's basically written as 1/3 a memoir of anecdotes and stories from the last 5 years, which I thought people would find not only funny or amusing or humorous, but also quite insightful at looking at where I've sort of tripped up and made mistakes, and hopefully where they can learn from. And then the second 2/3 of the book is a manual on my process, and it's not very all-encompassing. It's quite niche, and I know I have a very specific skill set and approach. So I thought it'd be quite interesting to add that in and just have a very detailed and thorough look at the things that I do on a day-to-day basis.
Yeah, you are definitely kind of an altcoin first trader, and even your entry into crypto was around altcoins before Bitcoin. I really enjoyed the way that you described your personal journey in the book, like getting introduced and being open about the fact that you just knew absolutely nothing. And like you just see
absolutely nothing. I still know absolutely nothing.
And I think that is a really great mindset to have for a trader and for any trader. So tell us about, and I encourage people to read the book even if you feel like you've got your hand on technical trading. In that section, you did dig into a lot of things that I think a lot of people don't pay attention to, like the section on rich lists, for example, and trying to identify distribution is probably something that 99% of traders just never attempt.
And not only that, I think even if you're a master trader in all aspects of fundamentals and technicals, I think there is something to be gotten out of the memoir. I really think just reading those stories, even if it doesn't bring you something in terms of information, what it might do is make you laugh.
Yeah, and that's exactly where I was getting to, is like people could read the book for the technicals and the way you do fundamental analysis, and everybody does it differently, so there's value there. But I just found myself several times through your personal story, either like cracking up because something was funny, or like the name of some coin from 2014, or just like, just covered my eyes and being like, oh my God, Nik, why did you do that? Or like, something like that. So
did you ever find yourself reading it and thinking, shit, I did that when I first started? I remember, just silly things where you're like, why would I even think about doing that? Now that you know and you've been through those experiences, and you're like, wow.
Yeah, absolutely. I mean, a lot hit home for me. and we're gonna talk a little bit about the book, but then we're gonna skip to now, because your book basically ends with from a personal story side of essentially you having a comeback story in 2017,
Yeah.
and going through tragedy and recovering from that, but we don't know what Nik is up to in 2018. But before we get to that, tell us your origin story of what got you into crypto in the first place.
So I was on Reddit, and I never used Reddit when I was younger. It was just a chance occurrence that I was on the website, and for some reason I happened on the Dogecoin subreddit. I was like, what is this? Why are there pictures of dogs and memes everywhere? And who are these random people who are talking about digital currencies? And I'd never heard of Bitcoin before this. I had no idea what it was. And yeah, I actually hadn't even heard of it. So the whole concept was unfamiliar. And so I was on the website, and I was just browsing through the subreddit, and I just got hooked by the community. Really, everyone is just really happy and cheerful and just aloof and just laughing and making jokes and taking the piss, but also at the same time they're doing something that I'd never seen before, which was transacting and a medium of exchange digitally. And I was like, wait, what? So it's not pounds, it's not dollars, it's not euros.
Yeah.
It's a Dogecoin. It's a coin. It's a digital coin that has the logo of a dog.
When you heard about that, did it sound like money to you, or did it sound like something fun that you just did back and forth?
I think it sounded like something fun more than it sounded serious.
Yeah.
Up until the point that I actually got involved and started using it myself, and I was like, wow, this is actually revolutionary.
Yeah. Did you ever have like Pogs, or I guess they were like Pokemon, like all those old card games and stuff as a kid?
I was a big Pokemon fan.
Okay.
I mean, even when I was 17, or 18, I was still like interested in it. I wasn't like collecting it anymore, but I was still interested in it because it has that nostalgic feel whenever you think about it. And it did kind of seem quite similar when I think about it, having that Dogecoin subreddit, because it was very sort of, it felt kind of collectible and like, oh, I have 1 million Doge. Like, what's that, like $4 at the time? But like 1 million of something makes me sound like I'm rich.
Yeah.
So as a kid, you're like, oh my God, this is great. And it was just really interesting, just coming across something which you just never had any conception of prior to it.
Yeah. And at what point did your knowledge transition from, hey, there's Dogecoin and this is fun, to thinking like this is something with a potential investment component? Because I know personally, like it sickened me, but I had knowledge of Bitcoin when it was like $6 or less. And
yeah,
even though I'd been involved in markets, I did not consider or think of Bitcoin or crypto from the mindset
of having
worthwhile. Of having an investment thesis, even if I felt like it had
not even
case.
Speculatively.
Right, not speculatively, which now it blows my mind that you can't think of that, because I think in the broader public, like when you talk to your family or your friends and they hear about it, now the price is what dominates the conversation versus a use case or a community or something like that. And you really approached the book from the perspective of use cases and communities and whatnot until you dig even deeper into the speculative side. So did you have a similar journey, I guess, in coming to realize like, hey, this is also something that you can invest in and make money on?
It took me a couple of months. It was December 2013 when I first came across the Reddit. And then it took me till February before I decided, actually, this is something that I can make some money in, and that I actually Googled. Because obviously when I was just within the confines of the Dogecoin subreddit, I was like, okay, what's a cryptocurrency? I didn't know what that was. I didn't know how to use a wallet, any of those things, those fundamental things. And so I was slowly getting used to using the wallet and receiving tips from strangers. So all of that sort of transactional knowledge came through. And then it got to February, and it's like, I still don't know what a cryptocurrency is. So I googled it, and that's when I found out about Bitcoin, and that's when I also came across CoinMarketCap, which you could track prices of things, prices of different cryptocurrencies at the time, and that's when I actually started to think of it as money and as a potential investment asset. It was around then.
I'll give one tease or quasi spoiler of the book, which is that you started with what, a couple hundred British pounds?
Yeah, it was 150 pounds.
Yeah, 150 pounds.
About $200. Yeah.
And then you worked that up in your first go round before you went and finished school and took a break. You worked that up to a significant number of Bitcoin in today's dollars. Are you willing to share that outside of the book?
Yeah. I mean, it was, I think it was, what was it, like 26 Bitcoin or 30 Bitcoin?
I think the book says around 30 Bitcoin.
Yeah.
And of course, you think of 30 Bitcoin and at, anywhere $10,000 to $20,000, you're like, good job.
And it's just a significant amount of money.
Yeah, but for you, that was $11,000 that you took and used as part of paying for yourself at school.
Yeah, exactly. And now looking back on it, I was like, that was the dumbest idea ever. But hindsight is 2020.
Mm-hmm. But you started, when you came back, I mean, you had these lessons that you had learned, and I will leave a lot of your lessons learned for the book because I think people would enjoy the story. But you came back and basically were starting fresh in 2017. And
I mean, I had an overdraft, so I'd burnt through my money. And
to be honest, that freaking blew my mind, man. I was like, oh God, why did you do that? Like, I would never recommend anyone to do that.
And now looking back, I even say in the book, I make it very clear that the one lesson that anyone should take on as a newbie is don't start with money you don't have.
Yeah.
But I did that exact thing. I had I was minus £1,100 into a £1,500 overdraft.
Yeah, so you were living basically on the overdraft protection from your bank account.
Yeah. And then somehow, just thought it'd be a great idea to take some of this money and get back into crypto.
Yeah. What do you think about this idea? Which is, I know several people like yourself that have a story from the past where they didn't use proper risk management. They went all in on a coin and they had several comeback stories. Maybe they lost 90% of their portfolio on a bad trade or whatever, they got hacked. And then they came back from it. And oftentimes, again, still using bad risk management. For every person like you that had a comeback story, there's probably half a dozen people or more that don't. Like, they just kind of left.
No, they died off and have never returned.
Yeah. So what kind of advice do you have for somebody that says, like, well, how in the world can I 100x my starting point, like you talked about from a BTC basis? Like, how can I 100x my starting point without taking equal risks? Like, do you think that's possible, or do you think, what kind of growth trajectory do you think someone could go on if they're starting today, they're reading your book, and you're saying, well, don't do it like I did? Like, what type of growth perspective do you think there is for someone in that position?
I think there is still the opportunity to 100x your capital, especially if you begin with a small amount of capital like I did. Obviously, if you're starting with, what I will say no matter what is only start with disposable income, but that could vary massively. Right. You could be someone who can save, $30,000 a year, and you can put 10,000 of that into starting a crypto portfolio. Yeah. Or you could be someone who's literally saving £100, $150 a month. And you've got very little in the bank to actually go, I have this disposable income, maybe $200, and you're like, wait, what can I actually do with that? And I would suggest that for those people who start with very, very little, because it doesn't take as much work to earn that money back if you lose it. Perhaps in those early stages, risk management can be a little bit lax. But obviously, the worry there is that you form a habit. So if you're not very good at breaking bad habits, that can be detrimental in the future. So it's up to the individual to decide, well, how strong is my mindset? How emotionally attached am I to this amount of capital, no matter how big that or small that amount is? And then to decide from there, am I okay with taking a larger amount of risk to begin with, knowing full well that it could make a bad habit, but that I could give myself a sort of leg up above everyone else. I could get from $200 to $20,000 fairly quickly if I'm taking significant risk to begin with. And if I lose that $200 or $400 or $500, I know I can probably make that back relatively quickly just in my job.
Yeah.
If you do the same thing with $10,000, it's a different scenario entirely.
Yeah, absolutely. And I think another thing too is you need to strategically go into that situation and say, I'm going to scale back my risk as I grow this in order to protect what I've done. Because when you're taking those risks early on, you may get your first double or your first like 4x, and your $200 is $1,000, and now it's using that same risk profile. Eventually, you will get burned. Like you tell stories about where you got burned and how you had to start all over, basically. And if you gradually decrease your risk profile early on, then you don't have to rely on getting lucky 7, 8, 9 times in a row.
All the time.
Yeah, because you can slowly scale your way back to being more conservative as you go. Now, being disciplined enough to do that is a whole different story, and you have to determine for yourself whether you have the ability to be that risk averse.
And the paradox of that is you won't know until you actually have experienced those losses. So it's a bit of a catch-22 situation, really. And I think everyone will have their own journey wherein they will have their own lessons that they learn, and they will find themselves, not just as a trader, but as a person. You realize what your mindset is and how you need to make shifts in order to become more successful. Yeah,
absolutely agree. Another thing that you call this an altcoin trader's handbook, but even within the altcoin market, like there are people with different ideas for what makes sense to trade, right? So when I got into crypto, and it took me a while to say like, okay, I'm willing to trade something that's not like Litecoin or Ethereum. And I remember, some of my first non like Coinbase style altcoins were going on Bittrex, and I think some of my early ones were still like big caps relative, right? So whether it's Neo or OMG,
you're still talking like top 50s.
Yeah, top 50s, and coming to the conclusion that you're willing to trade beyond that, like digging into small caps, micro caps, going to exchanges where you might need to be prepared for all your money to be gone the next day.
Well, that's the thing.
It's a whole different mindset, right?
It is entirely different. And I think the exchange thing is quite a significant point, because a lot of these micro caps, you are having to go onto exchanges which might be a little bit more dubious. In which case, are you willing to take that risk? And for me, it's more a case of, I have maybe 5, 6, 7 exchanges that I'm used to using and that I have good reviews of, not only in my own experience, but from other people I trust. Mm-hmm. And no matter what, just making sure that the amount of time that funds spend on those exchanges is limited.
Yeah. And some of the stories that you talk about in the book where, you're waking up overnight and something's doubled, or you sit on it for a week and it's 10x or something like that. That's a more likely opportunity when you're in an exchange that's what we would call inefficient. So it's less liquid. Yes. There's less going on. There's less, and you talk about this in the technical sections where there's less in the way in terms of on the order book that prevents it from getting high. Like you don't have 100 BTC or 1,000 BTC to be able to double or 4x. So like it only takes a few orders for it to really get up there. So how would you cater someone's expectations that doesn't have that risk profile? Like they're not willing to go into a sub today at microcap, maybe sub $1 million coin on an exchange where they don't trust themselves. Would you adjust those expectations but use the same ideas that you expressed in the book?
I think even, even in the sort of $1 to $20 million market cap range, you've still got scope for 5-10x's, and we've seen it over the past year. How many of these top 300 market caps then end up in the top 100 for maybe a few days before they sell off violently? But it happens, and these supposed mid caps can become high caps in a bull market very quickly. So I don't think you necessarily need to sort of curb expectations so much as maybe curb how long it takes to reach those levels of return.
And when you decide to enter as well, right?
Yeah, and I think it's far easier but far more risky in the traditional sense of risk to have those returns in micro caps and low caps than it is in mid caps. But I think those opportunities are definitely there in the mid cap category. And yeah, just on the risk front, just to elaborate on that, I think the idea of risk is kind of fuzzy for most newbies, and they'll look at micro caps and low caps and they'll look at the low liquidity and the volatility and they say that's high risk. But that's only one form of risk. What the more important form of risk is how much capital is up for grabs, how much you're going to lose potentially.
Right.
So I think having a grasp of that definition of risk is much more important, and it can make micro cap and low cap trades seem almost as risky, equally risky as a mid cap or a high cap. Because if you're putting 10-15% of your portfolio into a high cap, to me that's significantly more risky than putting 1% into a low cap.
Yeah, absolutely. I want to get into the idea of diversification and also correlation. So,
yeah,
and these are related topics because in your early trading, one thing I noticed was that Bitcoin was losing significant value, but you were participating in these altcoin trades where the altcoin market was still thriving in some ways.
Where there was sort of an inverse correlation there.
Yeah, the correlation has changed over time, several times. So in periods, we have positive correlations, like what we've seen for the past 6 months, where if Bitcoin's going down, altcoins are going down. There was a negative correlation for the 6 months prior to that, the latter half of 2017. There were isolated altcoin pumps while Bitcoin was going up for sure in that fall and early winter range. But for the most part, Bitcoin was ripping and altcoins were doing okay versus the dollar, but just absolutely bleeding out,
dying.
Dying relative to Bitcoin. So was the market pretty decorrelated when you were involved? And have you seen this full cycle before?
I've been thinking about why this occurred quite a lot recently, and I think the main difference that I can pin it on is the fact that Bitcoin was so expensive at the latter stages of last year that the correlation became direct rather than inverse, because the amount of money in the space was so much larger. Whereas prior to that, the first 3 months of 2017, the first 6 months of 2017, we still had a pretty cheap Bitcoin. Bitcoin's market cap was very low. And so the alt USD charts were still relatively low. That the dollar amounts weren't very high, so they could rise with BTC. And then we get to $10,000, $12,000, $14,000, $16,000 Bitcoin, and you're like, wait, hold on a second. Now these altcoins, we can't push them up that much because actually Bitcoin's rising so exponentially, and the nominal figure is so high for these alts that actually there needs to be an inverse correlation now. We need to actually drive these down. So I think that's what we've seen over the sort of maybe last 6 months, where alts have been dying and Bitcoin's been dying because Bitcoin was so expensive that people are like, wait, I need to preserve my money. But I think now that we've had $20,000 Bitcoin, the next time round that we get an alt season, it will be another direct correlation again.
That's interesting. So you think that essentially Bitcoin at some point will find this separation where Bitcoin can range or do what it wants to do, and altcoins essentially get out of the gutter. I think a lot of people. It's really easy as a trader to say, this time is different. Like altcoins will never pump again, right?
It's so easy to say. And then you look at the chart for Gridcoin, for example, on Bittrex, and you're like, this has had the same cycle play out 7 times in the past 4 years.
Mm-hmm.
So you're actually betting against statistics if you're thinking that this is never going to pump again.
Yeah. So how are you therefore approaching diversification now? So for the last 6 months, it doesn't matter if you only had 1% of your portfolio in each altcoin, but let's say you were in 50 altcoins, they were basically all the same, bleeding just as equally painfully, right? So
yeah, pretty much. I mean, I think there's a few that I think there's a scale to it. Firstly, I think there's a spectrum of loss wherein I think with low caps and micro caps, there's only extremes. There's no middle ground. So you're either in a terrible fundamental low cap or micro cap, which is just the worst of the worst, and that will have a minus 95% over this past 6 months. But then you have low caps which are strong fundamentally, but because of their low liquidity, they haven't dropped off as much because people need to hold their coins because they have no feasible way of selling.
Yeah.
So you have maybe a 60% drop off in these coins, which is still significant. But if you've managed to find a bunch of different coins which are strong fundamentally and have suffered far less relative to the other coins in the space, I think that's one positive about on micro caps that I don't think holds for mid caps, which all just die pretty much, or high caps which all just die with Bitcoin.
Let's take a moment to thank our partner for this episode, The Ocean. Go to ledgerstatus.com/theocean now, then before the extended August 15th deadline, and to get 2,000 free tokens in the airdrop. Their team does not get these tokens. Their VCs don't get these tokens. This is purely for users, early adopters of their platform, to get trading discounts and other benefits of the token now and over time. The Ocean offers fewer fees and no fees for withdrawals and all that stuff because you're trading directly wallet to wallet. That means that your transaction is directly with another individual. Everyone that registers for the Ocean goes through KYC AML. However, the Ocean never takes custody of your tokens. So this is a really interesting blend to me. By doing KYC AML, they're able to bring on a liquidity partner for every single pair that they have on their platform so that you can trade on a DEX where you're not offering custody of your tokens that you own to the exchange as a centralized entity. But because you've gone through KYC AML, they're able to bring on liquidity partners to make that a pleasant experience, and you don't have that massive spread and all the other issues that you tend to have with the DEX. So this is a great and interesting take on a DEX. I interviewed the CEO and founder of the Ocean, John, a few weeks ago, and we really hit it off. That's why I invited him to be a partner for Ledger Status. I think this could be a really interesting way to move DEXs forward. They've got a great UI and UX. They've got true market orders built in. They've blogged about how they're going about that. It's fascinating. I think that you'll love this platform. Go to ledgerstatus.com/theocean to check it out and register for that airdrop. And thanks so much to the Ocean for being a Ledger Status partner. Do you have a period of time that you're willing to be patient or hold? Because something that stuck out to me that you wrote was how you came back to the market and it had been, I don't know, a year and a half or something like that.
Yeah.
And you said, and all these altcoins, like the places had changed, right? So like some that you were playing around with in 2014 didn't exist anymore. And now there's all these new ones. And my question is, do you think that there's a fear in the market or a good chance that a lot of stuff that we may be holding in so-called accumulation ranges just die?
Just die out. I think there is that worry and that possibility, but I think because of the transparency of the space, we can actually have a look at what large holders, the largest holders who have significant amount of money in these coins are doing. And for the most part, historically, if those people aren't selling, those holders aren't selling, then at some point that coin has pumped in the future. It's very rare that you find a coin that just completely dies off, and all that smart money is actually just dumb money and have just wasted, hundreds of thousands of dollars. I think that's quite a rare occurrence. And having looked at other coins in the past that have died off and looking at their rich lists, you can see that there's significant transaction in the activity levels, significant decreases in their holdings at those points just before they die, or just at the tops, the final pump before they die off. Pump. Yeah, exactly. And I think a lot of people were looking at January and they were like, oh, that's the exit pump. Now, looking in retrospect, thinking, oh, that was the exit pump. And I've been monitoring so many coins, rich lists and distributions, and all I see is more being bought.
On the high end, on the top addresses.
Yeah. So you're going, okay, either all of these people across all of these market participants across all of these different coins are stupid, or they know something that the newbie screaming that was an exit pump don't.
That's really interesting. So maybe there was money leaving the market, but it doesn't mean they're giving up on the coins. So they're basically preparing for another cycle.
I think that's probably more it. Changing the average cost and just sort of setting yourself up for another cycle. It could be a year from now, but it takes a long time for these markets to be set up to be most profitable.
How do you think that could change between ICOs versus traditionally launched coins, which now we've got a lot that are either pre-mined or otherwise have some sort of reward the same way that an ICO does, that gives a lot of percentage of the coin to the team. But let's say that you have a coin that is not like that, like it's fairly mined, or there's a relatively low dev reward in the block reward, something like that. Do you think there's a difference in the dynamics? Because personally, I feel like ICOs are much more likely to actually die out because there's a company on the other side of that, whereas a lot of the traditional coins don't have like a company alongside.
And not only is there a company, but there's a company with no incentive anymore.
No incentive, and they have VCs and everybody else.
Exactly. It's just, I'm probably the wrong person to answer this because I pay so little attention to ICOs. But I agree with you entirely.
Well, that's what I wanted to clarify is all the things you're saying, they don't necessarily apply, in your opinion, to an ICO.
I mean, they could, but you'd probably have to speak to someone who actually delves into the specifics of ICOs more deeply. And I mean, I've spoken to people who say that what I talk about rich lists and block explorers can be sort of translated to ETHplorer or an Etherscan, and having a look at token holdings. And sure, you can do all of that, but then you've got the extra baggage of the fact that 45% of the tokens are held by the team, and you've got $100 million that has been raised in capital, and it's just a lot of extra baggage, I think. And I agree with you. I think they're much more likely to die off, and because there's such a plethora of them, and it doesn't take any effort to make one. An ERC20 token is so easy to create.
So when you talk about things that you're willing to hold, you're paying attention to stuff that's either proof, I guess, is some of it proof of stake, or is it mostly proof of work?
I have a mixture of proof of work and proof of stake. What I'm actually looking for most of the time is the lowest emission rates and the lowest inflation. For me, if I'm looking to stay in a position for 6 to 12 months, I don't want the supply to increase by 500% over that time. And it's the case with a lot of staking coins, for example, where people go nuts over the fact that they've got 500% annual returns on their investment. And you're like, yeah, but that means that the supply increases by 500% or up to 500% over that same period.
Yeah. So and in the book, you used a high cap as an example too, is where Zcash has a high inflation. So you have historically avoided something like that, where you constantly have miners wanting to dump on bullish sentiment, right?
Yeah, and it's not that those coins will never pump, and it's not that they don't have value. It's the fact that there's over 2,000, over 3,000 coins in the space, not including tokens, and there's such an abundance of opportunity that why make it more difficult for yourself?
Yeah, what that reminds me of, and I know you're in the UK, it's a lot more dense, but in the States, like you could live in the city and there's only so much land to put housing on, right? And therefore you see,
here it's crazy.
Yeah, you see bubbles form where of pricing for homes because, the rent's really high or the mortgages are really high in areas where there's just nowhere else to build. Whereas you go to the suburbs, and a lot of times they have a harder time getting good pricing on real estate because you can always go like another quarter mile down the road, buy some farm,
and there's so much space. Yeah, and there's so much space,
and build a new neighborhood. So people always have that attention, that ability to just go get new stuff rather than see the value of the homes that exist rise. And I think an inflation model in a coin works similarly to where there's just always new coins. What
is the point of why would I risk my capital to a greater degree in a coin that has such a high inflation rate or such a high supply emission rate when I can find an identical coin, because there's so many clones equally with great devs or decent devs or great communities. I can find so many different coins like that. Why would I pick the one that's going to be more detrimental to my capital?
Yeah, and I'm actually of the opinion that a lot of ICOs will die. So my bias is
I hope so. I agree. I think we need a cleanse.
I think it's healthy for the market. So when people are talking about holding and whatnot, and they'll recover, and they may a lot of these ICOs, they may very well have some exit pump or something, but it may not mean that it's going to be some 10x or whatever to get people into these highly profitable situations. It might be just an escape attempt for people, investors, or the team, or whoever. And there will be a lot. There could be a lot of sellers.
Attention.
Yeah, there could be a whole lot of sellers on those because there's a lot of coins that they'll want to offload to try to salvage their investment.
Yeah, I mean, look at it now. All you need is a 50% increase in a coin to drum up attention nowadays. Like people go mad for that. So what if you drum up, 2x increase or 3x increase on an ICO? All of a sudden you've got such a flood of new buyers who think, oh, this could be the next 10x, 20x, and you're done.
Yeah, I think it's Stardust who likes to make these jokes, and over time he's said like 10x is the new 100x, or like a 2x is the new 10x, and
new 10x.
A couple weeks
20%.
ago, it's like break even is the new 10x. And you can really see sentiment in the market shift like that. Do you think that there is a good opportunity? Go ahead.
I was just going to say, and that's when that those 5x, 10x's, 20x's might actually come back, when people are like, oh, I'm so happy with my plus 20%.
Mm-hmm. Yeah, and you used that example in the book. Like you had a scenario where you felt like it was, you had a great deal, and then you saw it just skyrocket after that. Do you think that there's an opportunity coming for the return of traditional cryptocurrency projects? Because I personally do think that a lot of skepticism of ICO projects will come in as they fail to perform. But do you think that also means that there will be more opportunities in traditional projects, proof of work, proof of stake, but like fairly launched projects, if you will?
Yeah, so I think, and it's actually what I've been positioning myself in most over the past 3-4 months. I think that ICOs will have their sort of doomsday, whether it's an actual doomsday or not. They'll have some sort of purge. And that capital will then flow, maybe not immediately, but will then be looking for opportunities. And that will flow into the old traditional stable proof of work coins, proof of stake coins that have been fairly launched, good devs, good teams, little pre-mines, that sort of thing. And I think if you look back at charts, particularly at AltUSD charts from January, and you look at coin market cap listings and ranks, the ICOs were pumped to absurd levels. And whilst the coins like Folding Coin, which is just an old-fashioned proof of work coin, that still got a 5x pump. But when you compare it in terms of market cap to some of these dead ICOs which have nothing going for them that ended up at 100 million caps. And you look at Folding Coin and I think it got to like a 15 million cap, and you're like, there is so much scope for further growth in these coins. That I think that's where the capital will eventually go.
One of the things that I would want to challenge on that front, though, is, and I'm a newer entrant to the market. I wasn't in crypto at all until 2017. But when I think of like who is putting forth proper use cases, I'm not seeing a lot of it in general, but when I look at a lot of the traditional style coins, and it still seems like a lot of them are trying to say, well, we're like Bitcoin, but we're changing XYZ. Or we're like Dash, but we're changing XYZ. And they're still trying to be cryptocurrencies where all the focus is on how can blockchain be used in the world. And to me, like, Bitcoin is a fine cryptocurrency to me.
Yeah.
And outside of that, there's a handful of features that may interest me, whether that's something in regards to governance, or if it's a different take on scaling. But there's really only so much of that I get interested in. And I feel like maybe some of the mid caps would be the ones that have the opportunities there. And when I look at a lot of the traditional coins, they feel kind of like collectibles to me, more than like something that's going to be real. And does that worry you at all as someone that's investing in these projects?
Not at all. I can agree with you entirely, and still think or still believe that those coins have the most upside potential for a possible future alt season. And it's mainly down to valuations and technicals, to be honest, because I know that they're fundamentally sound. They might not be innovative or especially promising, but they're decent coins. They've stood the test of time as far as the history of crypto is concerned, and they're relatively low value. So I think, and looking at historical charts for all of these coins, their January pumps were very minor. Obviously, when you look at it in USD form or designation, you're looking at much greater pumps. But I think now that we've had the last 6 months of bear market in Bitcoin, those USD values can easily be surpassed. I think I think it's inevitable that we have $1 trillion crypto market eventually. And I think that sure, I agree with you. I think they feel like collectibles and quite nostalgic, and not really anything special going for them, but just that they'll just be around as speculative instruments for trading purposes. And I can still look at that and go, they might not get to 100 million cap or 200 million cap or a 500 million cap like some of these bigger, more innovative projects will do. But I think that a lot of them are sitting at $3, $5, $7 million. And there's definitely room for a 5-10x in a bull market there, no matter what the Bitcoin price does.
So basically, you just said something really interesting. So you said in a bull market, despite what the Bitcoin price does. So that actually means that there could be a decorrelation where alts enter a bull market, but Bitcoin remains sideways or even going down.
Definitely. I think there's only a certain amount of time that you can go in alts before it's necessary for there to be a new cycle. And I think because Bitcoin it's the largest cryptocurrency, it had the most volume in terms of billions and billions of dollars over the past year, and it went from $800 to $20,000 in less than 12 months. I think it needs this sort of decompression period. Whereas, a lot of alts, sure, they pumped in January, but they have far faster cycles anyway. So we've had 6 months of bear market in alts as well. It may only be another 3 months before the new cycle can begin.
So this is basically a bet on the idea that these markets have been markets, therefore you think they'll continue to be markets. Whereas I'm saying, like, well, will they continue to be markets? But
but I mean, that's the thing. I'm betting on the side of history,
right?
In the fact that especially the coins that I'm looking at in particular, they've lived through, several cycles. 5 years, some of these coins have been around, almost as long as Bitcoin. And I'm looking at them and I'm like, well, if nothing so far has taken them out, why would anything take them out in the next 6 to 12 months?
And you're adding to this that you're doing fundamental analysis and verifying, hey, there's a team working on this. Here's that team. I've been in their channels to know what they're doing. So you actually, you're eliminating this. There could be 1,000 coins like that, but that don't have anyone working on it. Like literally, it's just a dead thing with a chart.
Yeah, I mean, as I said, there's like, if you go on CoinMarketCap, there's 1,650 coins. If you go on BitScreener, there's like 2,500 coins. Mm-hmm. I'm sure if you go on some of the smaller, lesser known sort of statistic index websites, there might be 4,000 plus coins. And the vast majority of those are absolute shite. But but there's going to be at least 100 in there that are micro caps or low caps that have very good teams, active development. As I say in the book, I'm not looking for anything innovative necessarily, but what I'm looking for is coins that do the simple things well.
What are you excited about from a innovation standpoint? When I know you said you don't have to have innovation, but like you look at an announcement thread, like you talk about the importance of people doing a Bitcoin talk announcement or like just generally talking about what the coin is. We've seen these cycles where it's like master nodes or staking, like or
X11 was one back in early
like
2017. Like a new algo, wow.
Yeah. So there's a lot of like false innovation or copycat innovation.
Yes.
But what does excite you when you're looking at fundamentals? What's the type of thing that really makes you think a coin can stand out?
Yeah. So, firstly, I think it's important to say that whilst for the vast majority of investments or trades, I'm not looking for originality or innovation, as I say, it is the most innovative and original coins that tend to be the ones that grow the most exponentially. Yeah. So if you can find those and find fundamentally sound innovative projects, then obviously you're on a potential gold mine. Mm-hmm. So I am constantly looking out for new, interesting projects that I think have greater upside potential than others. But I think in terms of innovation, one thing that will remain the most promising is privacy, because even though it was the first real innovation, when Dash came out with its own form of kind of lukewarm privacy, it's nothing particularly. It was nothing particularly great at the time, but it was something, and it was something that hadn't been done before. And I think that has remained a constant in the space over the last 5 years. That whoever seems to be on the forefront or the breakthroughs in privacy technology seem to be the coins that are getting the most attention and the most traction. And I think over the next 5 years, that may become even more important. And because I think it means the most to the most people. Well, it's of the most use to the most people around the world. There's only so many people that, whilst it's a great and useful innovation, there's only so many people that will be able to stake or run a masternode or even atomic swaps or any of these things that help user ease. I think they're great, but privacy is something that is kind of fundamental to everyone's lives.
And when you say privacy, someone could be listening to this and they could be like, just use Monero, man. Or whatever their favorite privacy coin is. Yeah. But I guess there are a few areas, if we take privacy as an example, like in general, privacy coins can be difficult to use, or they may not be private by default or have different degrees of privacy. So there could be innovation in the form of privacy. There could be innovation in the ease of use of using a privacy coin. And then I guess the third big one would be maybe like efficiency, like how much work does it take to maintain this network that's private?
I think ease of use, as you say, is probably one of the most important things, because for the people that need to use privacy as a feature, I think they want it to be as easy as possible. You don't want to have to use 14 different steps before you can get your transaction completely private.
Yeah. Whereas like something like Zcash is public by default, and you got to go make sure, talk
yeah,
to
exactly.
private.
And I think also in terms of speculative opportunity, you don't really want to be investing in the biggest coins in the privacy space necessarily. I think Monero will be a leader for a long time, but it doesn't mean it's the best potential investment in terms of actual speculation and upside potential. There are coins that are doing similar things to Monero at 1/100th of the market cap. And it's trying to find those projects that maybe they won't do anything even more special than Monero, but if Monero is rising, if Monero grows and its tech gets better and more efficient, and it grows 2x, 3x over the next 2 years, what about these projects that are 10 million caps doing exactly the same sort of thing? They can definitely do a 5 or a 10x. And unless you're putting in $100,000 plus into the investment, the difference between $1 billion market cap and a $10 million market cap doesn't make any difference. You can put in 10 grand into a $10 million market cap in the same way. It's not, that liquidity is there.
What else would you say you're excited about in 2018? Like, it's been a pretty depressing market. So I want to hear from somebody where they feel like there's opportunity, because you sound like you're very much looking forward to the future of the market. And you don't have the bear blues. So
no, I don't, and I think I've actually become numb to it entirely. But I think part of it is because I was so focused on writing the book over the past 8 months that it completely it took up every moment of my free time, and I wasn't spending any time worrying about the bear market. And I'd taken necessary precautions in January and in February and in March to make sure that I had enough, fiat covered for 2-3 years of living expenses. I could, easily ride out a 2-3 year long bear market if it ever got to that point. So I was feeling pretty comfortable, and I was like, whatever happens from this point doesn't really matter because I'm okay. And I was just focused on the book. And then now we've got to the point where the book is out, and I think the worst part of the bear market is pretty much over, right? Potentially not for Bitcoin price, but I think in terms of alts, we've got most alts were down minus 80, 85, 90%.
Yeah.
In Bitcoin
relative
value as well,
Bitcoin.
not just
Yeah.
USD.
And relative to USD, a lot of them. I mean, there are people that bought those altcoins at the worst times, and now they're down literally 95+%. Do you have advice for somebody in that situation? I mean,
you just gotta hold it out. You can't sell. You can't sell at 95%. What's the point?
Yeah.
You've got yourself in that situation, and in that case, I think the best thing is just to hold. And even if it takes another year for those coins to pump again, it's probably worth it rather than trying to cut your losses at 95% down on your money and trying to build yourself back up from that point.
Yeah, at 95%, I think I probably agree with you. I've cut some coins with some nasty losses, 60%.
I cut mid caps and high caps at like 60%. I'll do that, or it won't even get to 60% a lot of the times, because I'm looking for those coins. I'm looking more at technicals, and I'm looking at if this low gets closed under on a daily chart, then I'm out, that sort of thing.
Yeah.
Whereas if I'm because of the risk approach I take with micro caps and low caps, I'm like, I don't really care. It's fine. It's 0.5% of my capital to begin with.
Right.
And if I lose that, that's fine. The vast majority it's just anecdotal evidence, but the vast majority of positions I've taken have not died.
Mm-hmm. Yeah.
So yeah.
In general, I think it feels safe for me to say, like, you're, at least from the front that we're talking about those coins with some degree of your revenue, or rather of your capital. You're a speculative low cap investor, and that is a distinct strategy for you to be able to take advantage of those opportunities. And that's different from trading, like you just said, with mid caps or high caps or Bitcoin.
Absolutely.
Do you do very much trading, active trading, where you have a whole different approach?
I So back in January 2017, when I came back to the space, I was obviously working on my uni dissertation at the time, and so I kind of got rid of any day trading or intra-week trading approach that I had from traditional markets the year before that, and just went, you know what, I'm just going to stick to sort of longer term positions at least whilst I'm at uni. Then it got to summer, and I'd graduated, and I started doing a little bit more. I got back into margin trading BTC, and I was day trading high cap alts for 10, 15, 20% in a day. And then as the summer progressed, I was like, I actually don't enjoy spending time in front of a laptop screen looking at charts and having to basically being a slave to price, because that's what you have to be as a trader. And many people enjoy it, but it's just not something that I ever enjoyed. So for me, I actually started to then scale back out of that. And now, I don't tend to do much. I'll do intra-month trades, so it's kind of like a swing trade. So I'll do that sort of thing on mid caps, playing 30-40% bounces in stuff like Ubic and those sort of coins that that you can play that sort of thing in. But I won't actively trade. I don't do anything that's less than a week long nowadays. It's just because I don't have time. There's other things I'd rather be doing with my time rather. And two, it's just I think it's a lot more stressful than the approach I have, and a lot less rewarding. I think if you're particularly inclined towards the trading strategy and the trading approach, and you actually enjoy that, then it can be very rewarding, because you can sit there and you can look at charts and enjoy that experience as well as making money whilst doing it. Whereas for me, it was basically me sitting there and going, I'm actually making less money than I am from speculative investments, and it's taking up more of my time.
Yeah, and honestly, especially for people that are part-time traders, that's the much more practical approach as well. Like they don't have the time to.
That's true.
They have a job. So if you're saying, and I tweeted about this I think a couple of weeks ago, where I looked back on a week and I look at charts a lot, and I don't necessarily trade actively. I'm a swing trader primarily as well versus intraday. But I do like to keep an eye on what's going on in the market today. But I was looking through some stuff and I was like, man, you really get the majority of information out of daily and weekly charts. And I think that I think someone could look at, they could set out a day, whether that's, Saturday morning or, like a Sunday night, something like that. And they could part-time, they could chart the things that they follow. Maybe they track 20 coins that they are fundamentally interested in. And then look for opportunities, reset their stops, reset their take profits if they're in active positions, and literally spend, maybe an hour or 2 hours a week going through those things, making the adjustments, and then don't even care or look at it until the next week. And what happens, if it doesn't hit your stop, if it doesn't hit your take profit, then you move on. And I think if someone's interested in the space, but they're finding themselves consumed, like that's certainly a valuable approach. And I think that you could probably outperform when you're constantly second guessing yourself or like freaking out.
Especially if you're a inexperienced trader, emphasis on trader. If you haven't had much experience doing intraday, intra-week trading, then even trying to juggle a job and the markets, which are 24/7 in crypto, is impossible, let alone when you have inexperience. So you're more emotionally attached to those positions and you can't make clear, rational decisions. I think what you just said, or what you just outlined as an approach, would be perfect for those people who want that first step into trading. They don't want to invest, and they don't have time to trade, within the day or within the week. I think that's a great approach. But at the same time, I would say that for those who have never traded or invested before, I think investing is far easier. And that would be I would work towards trading from that point. I would start investing, learning how the markets work in that way, and then going, okay, now I'll take a position trade where I'm in it for 2 months, 3 months. Now I'll take a swing trade where I'm in it for 4 weeks. Now I'll take a intra-week trade. Now I'll take a day trade. And I think that's the progression. Most people seem to think that you need to start with day trading because they think it's glamorous, and it's actually the complete opposite.
Yeah, it's the grind. So I want to finish with what you're doing now, where you're choosing to spend your time. You're out of school. The book is out. You had mentioned that you were doing some mining in the book. Are you still doing mining or staking with projects that you're interested in, or are you spending your time in other ways?
I no longer speculatively mine. It was after the hack that I seriously sort of reconsidered, and the fact that I don't know very much about mining anyway, and
Yeah.
Most of what I know is from people around me who are far better at it, and I've never sat down with them and had a deep enough conversation to actually get to grips with everything that I need to know before taking it seriously. So I just thought, you know what, just axe that part of my life off. I don't need to worry about it anymore. So I haven't been doing any speculative mining. I definitely do run masternodes and stake some coins, and I think that's a good way of getting a passive income, provided that you filter for fundamentally strong projects, coins that don't have high inflation rates, all the usual stuff.
Yeah.
I think in those cases that it is a good passive income model, but
so
people
even in
take
the
it
worst
way too far.
Even in the worst of markets, in that case, between the fact that you saved up enough to go a few years in a bear market, plus some residual income, even if the coin itself is depressed, you're still getting income from staking.
Yeah, exactly.
Those coins. So therefore, you get some income to help you manage your life, assuming that you're not living the high life every.
Yeah, I mean, to be honest, I don't use the passive income from staking towards any builds or anything like that. I just let that accrue as a compounding position.
Dividend. Yeah, but you could if you wanted to.
Oh yeah, absolutely. I could take that out and convert it to fiat. And if you're someone who needs to pay the bills on a monthly basis and you want to keep some money in crypto, it's a good way of keeping money in crypto while still having something that can help towards any bills that you might have. To be honest, I'm spending I've resigned myself to just enjoying my time at the moment.
You're retired.
Because I am basically, I'm taking like a 3 to 6 month long retirement, in that I'm not really focused on, I'm in most of the positions that I want to be, and I'm starting to deploy a little bit more capital towards alts, and I have been over the past 4 weeks, aggressively getting into alts, on top of the positions that I already held. And now I'm in a position where I'm sort of thinking, you know what, I'm happy with where I am. I'm just going to let whatever unfolds over the coming months happen. And there's so many other things that I've been wanting to do that whilst I was writing the book, I didn't have time to do. So many, books I wanted to read, and just like having day trips out of the house because I was confined to my bedroom or my study, just writing. So yeah, there's just a lot of stuff outside of crypto, outside of work that I want to do for myself. So that's what I've been doing over the past, 4 weeks, 6 weeks. And yeah, I think I probably need it just to refresh my mind and reinvigorate myself, after, 9 months of nonstop research and writing.
Yeah. Hey, well, Nik, congratulations. I'm happy that you're able to take a break now, and I want to catch up with you in a bit when the market does turn and see how things have gone in the transition and with your strategy. Maybe talk
That'd
about
be great, man.
How this ICO death versus return of the old school coin concept has gone. I mean, you take a different approach from me, so I think that it was beneficial for me to read your book. One, I just love hearing any old story about how people were, in the Wild West, like you said, in the personal part of the book. But even on the other parts, like you do stuff in your fundamental research that I literally never do. Like the way that I scan fundamentals is almost completely different, and I love seeing someone else's approach. And I enjoyed it. And I hope that people will pick up the book, altcointradershandbook.com, or if you want to go to like ledgerstatus.com/handbook or maybe ledgerstatus.com/Nick. I'll put a link straight to your book on that.
Thank you, mate. Cheers for having me on.
Yeah, thanks for joining me, and we will catch everybody next time.
Monuments crumble in the blink of an eye. The easy river has just run dry. In a house of cards, I feel the breeze wound so tight.